Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PROTO LABS INC quarterly report. PROTO Labs provides a range of digital manufacturing services to various customers. The company's offerings include injection molding computer numerical control, CNC, machining three-dimensional printing sheet metal products. These services cater to product developers, engineers, procurement professionals, and other customers in the United States and Europe. PROTO Labs Inc. Stock price surge. A year of growth and confidence in the past year. PROTO Labs Inc.'s stock price has skyrocketed by over 46.96%, with a one-year total shareholder return of 79.4%. This significant increase can be attributed to a series of positive financial reports and strategic developments throughout 2024 and 2025. Key drivers of this growth include strong operating cash flow in Q3 2024, a new $100 million share repurchase program announced in Q4 2024, and record-breaking revenue in both Q2 and Q3 2025. The company's ability to exceed revenue expectations and beat analyst estimates has consistently led to stock price increases. PROTO Labs' strategic initiatives have also contributed to increased investor confidence. The company's expansion into production beyond prototyping, reorganization for enhanced efficiency, and growth of manufacturing capabilities in areas like CNC machining and metal 3D printing have all played a role in its success. Overall, PROTO Labs Inc.'s stock price surge can be attributed to a combination of strong financial performance and strategic developments that have boosted investor confidence. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth was driven by a 7.8% increase in total revenue, primarily due to a 10.3% increase in the United States segment and a 7.8% increase in average order value for larger U.S. customers. Additionally, CNC machining revenue increased by 18.2%, sheet metal revenue by 13.9%, and injection molding revenue by 2%. On the other hand, revenue decline was driven by a 6.3% decrease in 3D printing revenue and a 5.6% decrease in customer contacts served. Furthermore, injection molding revenue decreased by 2.2% due to unfavorable market conditions. The favorable impact of foreign currency exchange rates also contributed to the growth in consolidated revenue, with a positive impact of $1.2 million for the 3 months ended September 30, 2025, and $2.1 million for the 9 months ended September 30, 2025 compared to the same period in 2024. Net income experienced fluctuations between December 31, 2024 and September 30, 2025. Initially, it decreased by $7,852,000 from December 31, 2024 to March 31, 2025. However, this trend reversed with a $2,790,000 increase from March 31, 2025 to June 30, 2025. Unfortunately, net income declined again by $776,000 from June 30, 2025 to September 30, 2025. Profit margins also underwent changes during the period. The gross margin decreased from 45.6% to 45.3%, while the effective tax rate increased from 31.9% to 33.5%. These changes can be attributed to several factors, including increased operating expenses, such as marketing and sales, research and development, and general and administrative costs. Additionally, a decrease in gross profit due to various factors like revenue mix, pricing, and sales volume contributed to the decline in profit margins. The fluctuations in net income and profit margins were also influenced by higher revenue volumes, leading to increased costs, incentive compensation related to annual short-term incentive compensation plans, and increases in personnel and related costs. The company's financial performance indicates a stable generation of operating cash flow, although there was a slight decrease in net cash provided by operating activities from $60,535 in 2024 to $58,053 in 2025. The company still maintains a positive operating cash flow. This suggests that the business is able to cover its operational expenses and generate sufficient funds for future growth. The company's debt level has undergone significant fluctuations. Initially, total debt increased from $73,361 to $92,136. However, a notable decrease was observed between December 31, 2024 and September 30, 2025, where the debt level dropped from $2.2 million to $0.5 million. Meanwhile, interest expenses on finance lease obligations decreased from $26 in 2024 to $16 in 2025. Management is optimistic about the company's future outlook, emphasizing its commitment to innovation through manufacturing revolutionization and expansion of product offerings. Key strategies include accelerating innovation by expanding sizes and materials, supported investing in technology and personnel to achieve goals and expand product lines expanding globally. Leading to increased general and administrative expenses, however, management also acknowledges potential challenges, including increasing costs due to personnel-related expenses and investments in marketing, sales, research and development, and general and administrative areas. The company's financial summary reveals a significant investment in its own stock. Over the past period, the company has engaged in share buybacks, demonstrating confidence in its future prospects and value. Specifically, it has repurchased 258,454 shares for a total of $12.8 million. This strategic move aims to increase shareholder value by reducing the number of outstanding shares on the market. Concerns about inventory buildup or supply chain disruption are valid based on recent developments. The company's inventory has increased by $1.766 million from December 31, 2024 to September 30, 2025, indicating a potential accumulation of stock that may not be selling quickly enough. Furthermore, the closure of a key manufacturing facility in Eschenlohe, Germany, and the discontinuation of 3D printing services at its Putzbrunn, Germany location raise concerns about supply chain resilience. These disruptions could impact the company's ability to meet demand and maintain production levels, exacerbating inventory buildup issues. These developments suggest that the company is facing challenges in managing its inventory and supply chain, which may have significant implications for its operations and financial performance. That concludes the financial summary for PROTO LABS INC. Feel free to comment below, and I will be happy to answer them when possible.